Let us understand concept of debtors management or receivables management. See what type of decisions we will be taking in this particular chapter. If we are selling goods on credit and we allow a credit period of 2 months, company is planning that let us increase the credit period, let us make it more liberal and make it to 3 months. Should company increase the credit period from 2 months to 3 months? Sometimes it is also lowering the credit period, but the process of decision making will remain same. Let us right now understand, if company want to increase its credit period, what will be advantages? There will be increase in sales. See, increase in sales is never an advantage. Understand? If I manufacture this pen at 11 rupees and sell it at 10 rupees, more sales will result into more losses. So what is the advantages? Increase in profit because of increase in sales. This will be my advantage. What will be my disadvantage? Try to understand. As the credit period has increased, the sales has increased, even my bad debt will increase. Bad debt is directly proportional to time. See, if I sell goods on cash, there's no chances of bad debt. If I give 3 months credit period, there will be more chance of bad debt. If I give 1 year credit period, there will be more and more chance of bad debt. Increase in collection cost. And there will be increase in interest on debtors. And this we will understand in detail. Try to concentrate what we are talking about. Many of the students, even after calculating all this thing, do not understand what they are actually doing. Say I am running a book stall where I purchase books and sell books on credit. I purchase in cash and sell it on credit. Regularly, I need to keep a stock of 1 lakh rupees goods. And as I sell the goods on credit, every year I sell goods worth rupees 12 lakhs. Every month I sell books worth rupees 1 lakh. My credit period is, say for example, 2 months. Then my debtors will be 2 lakhs rupees. What is my working capital requirement? 3 lakhs rupees. Say I have taken loan from a bank, either OD or CC, cash credit or overdraft, of rupees 3 lakhs at the rate of 10%. What will be interest per annum? Will be rupees 30,000. But please understand, right now we are not talking about this 30,000 rupees. We are talking only about interest which is related to debtors. See, we will have to keep the stock whether our credit period is 2 months or 3 months. We are having debtors of 2 lakhs, and so this interest we are considering is only 20,000 rupees. How 20,000? What is investment in debtors? What are our money block because of debtors is 2 lakhs. If it is 2 lakhs rupees, rupees 20,000 is interest related to debtors, and right now we are talking only about interest related to debtors, which is 20,000 rupees. Now understand, if I increase my credit period to 3 months, this will still remain 1 lakh. I need to keep a stock of 1 lakh rupees. But my debtors, first every month I sell 1 lakh rupees. Now it will be 3 months, so 3 lakhs rupees will be investment in debtors. Total working capital requirement 4 lakhs. but we will be considering only 30,000 rupees. How 30,000? 3 lakhs into 10% is 30,000. So what is increase in interest on debtors is only 10,000 rupees. We will consider the difference while we will consider this increase in debtors. Sir, so we will have to pay this 20,000 or 30,000 rupees only to bank. No, you will have to pay interest on your total overdraft or total CC or whatever you are utilizing. But right now we are taking one particular decision whether to increase our credit period or not. So we are taking this type of decisions and we are taking only relevant cost and not the total cost. We will convert all this into monetary terms. So what are my advantages? What are my disadvantages? I will compare both. If monetarily I am benefited, if advantages are more than disadvantages, I will be taking this type of decision to increase the credit period. So if we want to decrease the credit period, then my advantage will become disadvantage. There will be decrease in profit because of decrease in sales. And my disadvantage will become advantage. My bad debt will decrease, my collection cost will decrease, my interest on debtors will decrease. Again, I will do the same thing. If my advantages are more than disadvantages, I will be taking that type of decisions. Let us understand this even in the form of an example. Say my current sales is 10 lakhs rupees. My variable cost is 40%. So my contribution is 6 lakhs rupees and variable cost is 4 lakhs rupees. My fixed cost is 1 lakh rupees. And so my operating profit comes to 5 lakhs rupees. My current bad debt is 2% of sales. What is our tendency? Bad debt is 2% of sales. It is directly related to credit sales. So my bad debt comes to 20,000. My collection cost is 30,000. And let me go to interest on debtors. What is my sales per annum? 10 lakhs rupees. I am calculating interest on debtors. My sales per annum is 10 lakhs rupees. Divided by 12 will be nothing but sales per month. My credit period currently is 2 months. Let me write down. Yes, credit period is 2 months. This will be nothing but my average debtors or debtors. See, we have understood this n numbers of times. If I want to calculate debtors as on 31st March, and if my credit period is 2 months, which all credit sales will be outstanding of March and of February? What is sales of February and sales of March will be nothing but your average debtors as on 31st March. So any point of time, 2 month sales will be outstanding. So this is my investment in debtors. It is 1,66,667. What is our interest rate on debtors or interest rate on working capital loan? 10%. Multiplied by 10% is 16,667 rupees is my interest. On my CC, on my OD, no. Only the use of money because of debtors and the interest on it is nothing but 16,667. So let me write it down over here. Interest on debtors is 16,667. Sir, is this the total interest on my OD? No. Total interest on my CC? No. This is interest only related to debtors. 16,667. So my relevant profit is 4,33,333. We will come again to this profit, but let us say If we increase the credit period from 2 months to 3 months, my sales becomes a 15 lakhs. It increases 50%. My variable cost is 40% of sales, so it becomes 6 lakhs rupees. My contribution becomes 9 lakh. Fixed cost is remaining same, 1 lakh rupees, and so my EBIT becomes 8 lakhs rupees. My bad debt, as it is a percentage on sales, which is 2%, as my sales has increased, my bad debt has increased to 30,000 rupees. Even my collection cost becomes a 50,000 rupees as I have increased the credit period. How to calculate interest on debtors? Once again, try to concentrate. Now, what is my credit sales is 15 lakhs rupees. Divided by 12 will be sales of 1 month, but now we are giving 3 months credit. So this will be 15 lakh divided by 4 is 3 lakh 75,000. This will be my investment in debtors into 10% will be 37,500 rupees, which is interest on my OD, which is only related to debtors. This is 37,000. Please understand what was my relevant profit before 4,33,333. What is my relevant profit after adopting a policy of 3 months is 6,82,500. As my relevant profit is higher, we should go from 2 months to 3 months. Let us understand this concept of relevant profit. Our answer. Sir, is it my net profit? No. Is it my gross profit? No. Is it my cash profit? No. Is it my earning before tax? No. Is it my earning after tax? No, we have not deducted tax. Sir, we have not deducted n numbers of expenditures like interest, like dividend, like taxes. Then how we are writing it as a profit? We are not telling it as a profit. We are taking it as a relevant profit for decision making. So where this profit will be important in recording in passing journal entries? No. We will be able to take this decision whether we should increase the credit period from 2 months to 3 months or not. Otherwise, this profit is not relevant. The figure of this profit is not important. We just need, the figures are important just for comparison, which is higher. Otherwise, figures is not important. Let me do this thing. I am removing fixed cost from both the idea. I will incur my fixed cost, of course, yes. But let me delete it because it is same in both the cases. I am deleting it. Will my answer change? Yes. But will my decision change? The answer is no. My decision remains same. Still, my figure in 3 months is higher. My relevant profit in 3 months is higher. So whenever it is same, see, even if you consider taxation, the figure will be higher in this point 3 months case. Even if you consider interest, the figure will be higher in 3 months case. So we need to consider only relevant cost and we need to consider only relevant profit to take this decision. Even if you are ignoring your tax, because it is not going to change your decision. What is going to change your decision is something like interest on debtors, bad debt and collection cost. So we have taken only relevant expenditure to take this particular decision. And so this is a relevant profit for decision making. Good thing to write down in your examination. Relevant profit for the purpose of decision making. How this profit is important for recording the transaction? No. This is only important for making this particular decision. Try to concentrate. I told you that we should compare our advantages to disadvantage, but we have done total approach. We have calculated relevant profit in current policy, also in proposed policy. Sir, then how to do it over here? We can do it easily. What is increase in our EBIT 3 lakhs rupees? What is increase in bad debt? Increase in bad debt is 10,000 rupees. What is increase in collection cost? From 30 it has become 50, 20,000 rupees. What is increase in debtors? 37,500 minus 16,667, 20,833. What is increase in total cost? 50,833. What is increase in benefit? 3 lakhs rupees. You should always go for this type of decisions where advantages are more than disadvantages. And by how much? Try to concentrate. It is 3 lakhs minus 50,833. 2,49,167. 2,49,167 you are benefited. Sir, what about this total approach? In that case also, you will be having the same answer. 7,82,500 minus 5,33,333. 2,49,167. Is it? 2,49,167. Please understand, even if you will write down fixed cost over here, 1 lakh rupees, 1 lakh rupees, and then you find out the difference, then also your answer will be same, and the difference will be always the same whether you consider fixed cost or do not consider the fixed cost. Let us prove it. 6,82,500 minus 4,33,333. The answer is 2,49,167. 2,49,167 is your net benefit because of increase in credit period. Sir, if there is decrease in credit period, then we can find out a relevant profit by total approach. We need to compare relevant profit. We will be taking the decision. If we are going for incremental approach, there will be decrease in profit, but there will be also decrease in cost. You need to compare advantages, disadvantages, easily take the decision. Try to understand one last thing. This debtors, we have taken it from credit sales, and credit sales includes cost plus profit. So we are technically taking debtors at selling price. Sir, but whenever you go to a bank to borrow money, they will always lend you cost and they will never lend you cost plus profit. See, why normally we know debtors at selling price? That is because we have done debtors in balance sheet. In balance sheet, debtors are always recorded at selling price. But understand, whenever you are finding out relevant profit, you should normally take debtors at cost. At which cost? Now also there are two parts. You may take it at variable cost. You may take it at fixed cost. Sorry, you may take it at variable cost. You may take it at total cost. Why only variable cost concept? Because understand, for fixed cost you borrow term loan and you don't borrow working capital loan. So understand, there can be three assumptions while calculating interest on debtors. Number one, it is calculated directly on selling price, or interest on debtors is calculated on total cost, or interest on debtors is calculated on variable cost. If the question is asked in examination, sir, which assumption we should take, you should normally take this assumption. this is a good assumption that I will calculate interest on total cost, assuming that bank will give me total cost. Normally bank gives a total cost. Some of the private banks even lend you cost plus profit. So understand, assuming bank borrows or lends you total cost, you may also find out answer by variable cost. So let us finalize for examination. If total cost is available, we will be doing it on total cost. If fixed cost is not available and only variable cost is available, we will do it on variable cost. If none of the cost is available in the question, we'll be doing it on